Russia plays with the idea of launching a cryptocurrency exchange run by MOEX. The Russian government is considering establishing a cryptocurrency exchange to allow residents and local businesses to transact with digital assets, according to Anatoly Aksakov, chairman of the Financial Market Committee, in a recent statement to the Russian parliament. A concession would be granted to the Moscow exchange, MOEX, the company that operates the country's largest organized market for multiple assets, with the goal of ensuring that such an initiative is spearheaded by a respected organization with great traditions. Legislators in the country are expected to review and approve legislation aimed at regulating crypto assets. Some government factions advocate for outright prohibition of crypto-related activities, as the Bank of Russia has done. Sanctions imposed on the government as a result of its decision to invade Ukraine in February this year caused an indefinite halt in stock market transactions and pushed the Russian ruble to record lows against the US dollar as businesses, investors, and savers rushed to get their money out of the country in fear that the value of their holdings would deteriorate due to the upcoming economic hardship caused by these actions. However, the ruble quickly recovered and became the world's best-performing currency of the year, as the central bank took strong measures to contain inflation following the imposition of sanctions, and the government also found ways to repay its debt service despite asset freezes imposed by Western institutions. Sanctions remain a long-term threat to the economy. Analysts agree that the Central Bank of Russia's actions were precisely what was required at the time to stabilize the currency. These measures included requiring companies to convert 80% of their foreign revenues into rubles and limiting the amount of money that individuals could send overseas. Furthermore, a rise in oil prices has cushioned the country's export decline caused by the sanctions. According to Oxford economics Tatiana Orlova, commodity prices are currently sky-high, and even though there is a drop in the volume of Russian exports due to embargoes and sanctioning, the increase in commodity prices more than compensates for these drops. Analysts have warned, however, that the country's inability to resolve the armed conflict and reverse the sanctions could result in the ruble collapsing again if the central bank reverses the measures at some point. Cryptocurrencies, as a decentralized payment method that other governments cannot prohibit the government from using, could assist Russia in navigating sanctions. The same is true for Russian residents who have used digital assets to send money overseas by using unregulated foreign cryptocurrency exchanges that have set up shop in the country. However, some centralized exchanges have stated that they will actively monitor any transactions coming out of blacklisted countries, particularly those with legal operations in the United States and other latitudes that have taken action against Russia due to its hostile actions. To that end, these exchanges can block IP addresses and prevent government officials, oligarchs, and institutions from circumventing sanctions through the crypto realm. Individuals could, however, use decentralized exchanges such as PancakeSwap and Uniswap, the majority of which do not follow KYC rules, to convert their currency into Bitcoin, BTC, or stablecoins such as USDT and USDC in order to get their money out of the country. Other countries, such as North Korea and Iran, have used the crypto space to some extent in the past to circumvent sanctions and have even assembled teams of hackers to draw money from protocols with weak security protocols. Can Russia use the crypto market to pay off its foreign debts? Russia could certainly use the crypto market as an escape valve from the sanctions and penalties imposed during the war. However, this would be a limited option in the country's attempt to protect itself from the financial collapse that could occur if it defaulted on its foreign debt. Last month, Russia theoretically defaulted on the payment of approximately $100 million in interest on some of its dollar-denominated bonds. However, the country has the funds and has attempted to pay investors in a variety of ways because the US government has blocked direct transfers of funds to US investors. Even though it is unprecedented, the possibility of Russia using stable coins to repay its debt is certain if time passes and the government runs out of options. However, the main constraint at this point is that sanctions prevent investors from negotiating any kind of arrangement with the Russian government that would allow them to complete the debt payment.